Hi guys, this is Tal of Informed Trades, Informed Trades Pro and developer from P.R.I systems. I'd like to share with you today new indicator I'm working on that I'd like to share with the community. Tell a little bit about it, how to use it, where you can get it. It's going to be absolutely free. So let me start off with the basic idea of where I got this from. If any of you have traded futures or looked at indexes or stocks, you might be familiar with the TRIN, which basically gives you kind of the ratio between the stocks that have been sold and the stocks that have been bought at the same time. So high levels of the TRIN would mean that there's a lot of buying going on, and low levels mean there's a lot of selling. Excuse me, the opposite way. Um, and I was looking to do something like that, similar to that for the forex market. And basically, what this indicator that I've done does, and currently I call it uptick downtick, is it counts per every bar how many positive ticks have been occurred and how many negative ones, and how many different trades bought at a higher price and how many at a lower price. And the idea is to give you an indication of how much strength was in the movement. As in, if a bar went up, but the ratio between buyers and sellers was very low, you could say that you would know that there wasn't much strength in that movement. Even though it looked sharp, there was a lot of selling still going into it. So it kind of gives you another behind the scenes into what's going on in those candles that we look at. And then what I did from there is multiply that by the price. Which would give you really a good idea of how price is behaving, or how significant that movement in price is. And basically that's the indicator. It gives you these nice squiggly lines over here that go up and down, up and down. And the way I think this should be used is divergence indicators. And if you see that price is going up while the indicator is going down, what it's telling you is that the movement in price is you can see prices rising, but the strength of that movement is declining. As in, more sellers are coming in per each one of those bars. There's more selling than the previous one, and the actual point difference between each bar is smaller and smaller. Which gives you a good indication that price is about to reverse. And so I've highlighted a few places where that worked out over the past month. So this would be the first one from 12th of January. As you can see over here, price was going up. We're looking at the Euro USD now the whole time. 5-minute chart on the Euro USD. You can see price went up here. It went up, let's count that. That's 33 pips. At the same time, you can see that our indicator went down. All right, this is a classic divergence on any indicator. It went down, and as soon as that happened, price sharply reversed and went down, pulled up a bit, went back down again. And if you would have gotten in here where the divergence was recognized, you could have taken as much as 55 pips. Been great. Another example. This one's a longer divergence. This is um, over about 3 hours. We had kind of price was all in all moving down. It was ranging with a downward trend, while the indicator was surely showing that there were more buyers coming in. So you can see that basically the ratio between upticks and downticks was increasing, and the decrease, or the size of the bars, was getting smaller in the down movements and getting bigger in the up movements, which gave us a good indication that buying was coming in, that buying was about to start. And let's see what happened afterwards. So after all of that, again, we see the divergence confirmed over here, and price went promptly up. Once again for, let's see how much that is, about 80 pips on that movement. And then again we have a divergence. And this one it was a bit sloppy. So this line should be over here to be really correct. So as you can see, price was trending up throughout all of this. And there was a high here on the indicator and a high here, and this high is lower than this one, which is again a classic divergence. On the price we've got higher lows. On the indicator we've got lower highs. That's a classic. And once again, price collapsed. This time 61 pips. We've got a few more examples later on. Over here, okay. Let's look at that. Once again, we've got price rising. On this one, this is a much quicker divergence. It's about 40 minutes. As you can see, the price movement wasn't that significant. The sell-off, you can see the slope over here was significant, which shows that a lot of sellers were coming in on this movement. And let's look what happened. So price stalled a bit afterwards and collapsed. And you can see the divergence continued, basically. And while price was staying up here, more sellers were appearing. And from over here, we had a movement down as much as 100 pips if you stayed in for all of it. And then again, we've got another divergence that I highlighted over here. Once again, going down. Price is going down, as in we'd assume that sellers are coming. We can see again a sharp divergence moving in here, as in a lot of buying pressure building up, as opposed to the selling that we're seeing. And as you can see, again, a quick movement up. So that's it. That's basically how I'd use this indicator at the moment. It's still kind of a work in progress, so it's going to be freely available soon, and I'm going to be updating it as time goes on. So once again, let's review exactly what it does. It counts as price moves how many pips were upticks and how many ticks were downticks, as in how many trades traded on a higher price than the previous price, and how many of them traded on a lower price. And it compares that, gives the ratio, and multiplies that ratio by the difference between the close and the open. So basically, if price went up 5 pips, but if price went up 5 pips, and the ratio was 1 to 1, then it would give us a value of 5. And that really doesn't tell us anything. But if we see that price is going up and those values are going down, then we can tell that there's selling pressure coming in. Because while the difference is positive between the candles and they're making new highs, they're going up, the power, the strength, the amount of sellers coming in at the same time is increasing, which gives us the notion that price is about to reverse. So that's how this indicator should be used, and you're going to be able to find it pretty soon on my site at Informed Trades. Go to informedtrades.com. Look for the P.R.I. section or Discuss All section, and that's where you're going to be able to find it. And I hope you guys enjoy this, and thanks a lot for watching. All right, see you.